Good evening, friends, and I am in front of you on a webinar where you have a lot of opportunity to ask questions that are bothering you, and I'll try my level best to answer those. But before I begin the webinar, just a small disclaimer that this webinar is only to enhance your understanding about the equity market. Investment in securities market are subject to market risk, and past performance no indicator of future returns. But before we take questions in this one, I have few slides to talk about. Someone suggested that why don't you give a comparison of a gold versus Nifty 50 over 10 years and 20 years. So I'm going to discuss that in this webinar. I'm also going to discuss about Indian numbers that have come up till now and what does this indicate. I'll also discuss about how institutional investors have bought or sold in 2024, first 16, 17 days of 2024, and also which indices have performed. So these are all the things I'm going to discuss in this. So let me start with my this one. The good news is that market has been surging very quickly, and that's not a very while it's a good news from the market point of view, but it's not a good news from the long-term perspective. Why? Because if you look at it, from 68,000 to 73,000, okay, it took only 29 days. Now, what I've been observed that when market run up too quick and too fast, then it takes some amount of pause. And if you look at, for example, 64 to 67, it touched in 11 days. Am I right? And then what happened? It took 95 days for another, 67,000 to touch. And something similar can happen. So don't assume that अगर market 73,000 आज हो गया है, 73,000 13 days में, तो next 13 days में 74,000 भी हो जाएगा. Of course, anything is possible in the market. I'm not denying that. But when you look at the probability, is not. And whatever my experience tells me that when market run up too quick, too fast, it's not a good sign for the investors. It could be a good sign for the traders, not a good sign for the investors. Why? For the short term, I'm saying. Because market normally tends to give up the gain equally fast. I always prefer a market which moves up slow and steady. And why? Because that basically make a nice base. The market, when you climb too fast, what happens to you? Your heart will start pumping badly, am I right? And sometimes it could be fatal also. And something similar, when the market run up too quick, too fast, I think is not something good. I'm not saying market going to collapse tomorrow. I'm not saying that. I'm just saying that it does call for a little extra amount of caution. So what you are going to get into or get out of the company, be vigilant what you are getting in. Look at the fundamentals, look at the commentary, you need to, I think, do extra, because if you don't do that, my worry is that you'll run into a problem. So you need to be extra vigilant about what company you are getting into. At the same way, you need to look at what companies are holding in the portfolio and does it make sense to continue to hold that company or not. So only thing, previously it's like, when you're driving on a nice highway, you may not pay too much attention. Why? Because rasta सीधा है, मस्त है, जा सकते हो. The moment you started climbing hill, which is little tera mera, then you become more cautious in your driving. Am I right? Something similar it calls for. It doesn't say that you should leave your journey halfway. It just says that you need to be a little cautious of what you are getting into and getting out of it. Okay. This data which everyone has been asking, so I thought let me put it. So if you look at it, when you look at the period of 5 years, 10 years, 15 years and 20 years, this is a point-to-point return. So let me put it this way. In 20 years, if you had invested 1 lakh in 20 years back in 1 lakh in Nifty 50, the value would have been 11.6 lakhs. Versus gold, which has gone up to 8.9 lakhs. So clearly, Nifty outperformed. Let's look at 15 years. The 1 lakh if you have invested 15 years back would have become 7.31%, which gold has become only 4 lakhs. So again underperformed. Over a period of 10 years, it was 3.5 lakhs, 1 lakh what to put in. Now this has become 2.3 lakhs. So again gold, and 5 years period almost equal. Nifty and gold both are almost 1.9 and 2. There is hardly anything to take away. Now very obviously the gold looks little weaker as compared to Nifty 50. But that's where the challenge comes. So first thing I must explain you the power of CAGR. Am I right? Am I right? I must tell you the power of CAGR. Why I'm saying so? Because power of CAGR. Why I'm saying so? Purely because of 1 lakh becoming 11.6 lakhs. It looks big number. Am I right? Very, very big number. But the CAGR is only 13.1. It's not that CAGR is in excess of 30 or 20. The more you allow that compounding to happen over a longer period of time, the amount keeps becoming bigger and bigger. Just to give an example, in 10 years, with same 13.3% CAGR, the 1 lakh become 3.5 lakh. But if you assume that the same CAGR would continue, the 3.5 lakh in next 10 years will become 11.6. So I hope you're getting the message of power of compounding. Despite 13.3 was for 10 years, but 13.1% on 20 years, and yet the 3.5 lakhs become 11.6. So from 1 lakh to 10 lakh, 1 lakh to 3.5 lakh, it took 10 years with 13.3% CAGR. But same over the next 10 years, the power of compounding work and it become 11.6 lakhs. Okay. Now another thing. Now this data would give you impression that Nifty 50 is always good. Am I right? Against the gold. But remember, in Nifty 50, you do run into what we call risk of underperformance. Because आपको stock select करना है, नहीं करना है. Someone say I will buy Nifty 50 stocks, but then Nifty 50 also undergoes change, isn't it? The constituents. Unless you would have invested in ETF, that's a different story then. Of course, your return would be a little less because there will be some transaction cost, impact cost, but yet it would have given this. The point I wish to tell you is that the gold, you don't run a risk of stock selection. In Nifty 50, you do run this one. And if you look at the difference is 11.6 versus 13.1. It's not that huge difference also in terms of the CAGR. So my advice to all of you, which I have said in the past also, please have some amount of what we call, one second. Please remember, it's a function of what stock selection you do in Nifty 50 and what you should do, you should allocate gold also in Nifty 50 also. The gold should be 15 to 20% of your total portfolio to help you to make balance your portfolio, because sometimes the gold may do well, sometimes the equity may do well, but the gold can give a lot of shock absorbent to your portfolio. So the data which clearly shows that you should have balance between Nifty 50 and the gold. So keep 15 to 20% in gold. That's what my asset allocation advice would be. Now, how did the indices perform till now? Nifty 50 realty is still continues to be the 10.9, one of the best performing, followed by energy. Public sector unit continues to do well, and small cap 4% jump. Mid cap 3.2% jump versus Sensex and Nifty 1.4 to 1.2. Nifty Finance continues to be in red, Nifty Bank Nifty red, Nifty FMCG red, Nifty Metal red, and Nifty MNC red. Overall, mid and small cap continue to outperform the large cap, and Nifty Pharma is also among the best performing. PSU Bank did extremely well, up by 3.9%. Of course, this data will keep changing as the year progresses, but that's the story as of now. FII now continued in 2024, at least till now, while DII have been net sellers. I think they are looking at opportunity to lock in some profits, and they have been net sellers in 2024. If you look at the data, now this data has been looked at in a different manner. Why we have done that actually? Because you see two data, quarter on quarter में bracket में लिखा है. Today HDFC Bank declared the numbers. Now the HDFC Bank, when I add the number, when I look at it Y on Y growth, okay, it looks extremely promising. Why? Because the last year same time the HDFC was a separate entity, and then it got merged with HDFC. So number looks extremely good in that sense. Why? Because HDFC is not going to declare the numbers now. It's got merged with HDFC Bank. So that's why we have removed that. So overall number looks quite decent as till now. Why? Because quarter on quarter the net profit growth has been 1.5%. If I remove HDFC 1% and 16.7% and Y on Y 6.8%. Of course, we need to wait and watch how the result season progresses. Till now, some of the large companies, if I remove micro caps and so on, 50-55 companies have declared the numbers till now. So that's been the story. In total, I think 90-91 companies would have declared. A lot of companies are going to declare results in next few days. Even Reliance is going to declare the numbers on next Friday. So that's how it's going to work. So right now, number doesn't look so bad in a way. But it's too early to make a sense that yes, its numbers are going to remain the way it is actually. With this, let's open the floor for question answer. Yeah. Hello Sunil ji, greetings. On 3rd January during the webinar, you said that we have to consider quality more than momentum while selecting the stock of the A2. In one of the subsequent webinars, you also said that value should be given more important than the growth. If this is correct, then what should be more important between quality and the value? So, okay, sir, I talked about value investing, which talks about quality of the company. Don't get confused between quality and the value. Growth, where if the company is not performing well, also, even if it is losses, we would still go ahead buy because you believe that the growth will justify over a period of time the valuations. So when I say what is more important, both in a value strategy, it's okay. I think the confusion is happening because there are two different wording which has been used. Acquire good quality company at the reasonable valuation. That's what my advice would be. So please consider both quality and the value while buying. What I mean to say growth, and I give an example, like for example, Dixon Technology is commanding more than 100 times price to earning, only on the hope that this company will keep justifying the valuation. Like some of the recently listed IPO, they've been commanding such a huge valuation. I don't think they'll be able to do that. Okay, so this is what is basically. What would like to impact sugar after government announced 50%? I think this is very positive. What would happen that sea molasses, which has been used to get exported, now will be available for ethanol. So India's ethanol production will go up. So I think in a way it's a positive for the sugar company. Nothing much to worry about it actually. Hi Sunil, it was obvious yesterday that night's market would fall today based on the interest rate hike in US. Yet today, my Mojo PS sold account 50 lakhs was deployed. My PS tended today with negative. I know timing the market is in but why wasn't what? Sir, I'm little surprised with the this statement sir of yours actually. Why I'm saying so? I'm little surprised. 1 second, I just think there's some problem on the trading side. So let me just figure it out. 1 second. 1 second. Yeah, okay. So, sir, I'm a little surprised with your statement. Why I'm saying so? Today you gave money and we invested in negative. I think it's we are not investing for one day. Am I right? So we are investing for 3 to 5 years, and this thing will happen. Had you assumed that you had invested yesterday and it was positive, today it went down, then you said you sort of waited for the market. So I don't think it's a more sensible thing, sir. And if you think, I must tell you, Balaji, sir, if you think we are not sensible, you should not come to the PMS. My advice would be this, because in one day, if you are going to make a statement that makes me believe that you are a little short-term in your approach, and if that is so, we will not be able to help you, sir. I'll be very honest and frank with you, because we want those customers basically who have patience for 3 to 5 years. In fact, there is one video which I'm going to play, sir. Balaji sir, since you are PMS customer, you should watch that video tomorrow. I'm going to play only for our PMS customer about Peter Lynch, and he said something very nice thing. I don't want to discuss now, but one thing is that you must have a patience. If आज आपने पैसा डाला और बोलते हैं you are very sure that it's going to go down, तो फिर सर आप तो आज तो कोई buying ही नहीं होनी चाहिए थी. In fact, am I right? Nothing should have gone up actually. Everything should have come down. So I don't think that's a right approach also to come to PMS and having this kind of a observation. Rahul Kumar saying, when do you see the selling pressure coming after current liquidity when driven market as the retail flow is not stop at all? So Rahul Kumar, I think it's very difficult to say when will happen, what will happen. It's very, very difficult to. You need to stick to your core fundamental philosophy. Market can frustrate you, market can reward you more than what you expect, and market sometimes will punish you more than you deserve to be punished. So market works that. The moment you keep following your philosophy in a very principled manner, it will reflect in your portfolio value over a longer period of time. Short term, no one has a control. No investor in the world can say that this is what I have a control over this one. Am I right? So you need to have patience. You need to have this one and follow that principle. Don't jump from one to this and this. Basically, उसपे क्या होगा? पैसा नहीं बनेगा, नुकसान ज़्यादा होगा. It's like, you are driving on a highway, and sometimes you see one lane moving up. You try to move to that lane, and then you realize that the lane which you left has started moving further, and then again you move to that lane, and पता चला वो अटक गया, दूसरा lane चालू होगा. So you stick to one lane, but your philosophy should be very clear cut. And once your philosophy is very clear cut, you need to do that. So my advice would be, please follow in a disciplined manner the philosophy that you are following, and eventually it will reflect in your portfolio returns. That's very simple, because market में उतार चढ़ाव तो आने वाला है. It's a wishful thinking कि नहीं आने वाले, वो तो आने ही वाले है. But if you stick to your core philosophy, fundamental philosophy, it will reap your rich dividends. The moment you get emotionally charged, fear or greed, then it's not going to work in your favor. Mr. Sunil, Rajiv is saying, the different stocks have run up ahead of the fundamentals. No, sir, we don't think they have run up ahead of the fundamentals. See, if you look at some of the defense companies, different rail companies, I think they are still commanding less than 40p. Even if you look at the market cap to sales, they are less than 4x. So, we are willing to pay some of the private sector companies from some fancy industry 100p and more than 10x price to sales. Why not this company which have a genuine business prospects, and hence they should keep, I'm not saying they will keep rising every month after month, but from this level, if you still buy and if you hold on for some more time, it's going to make a good returns for you. So there is, I don't think, we don't subscribe to, I know some of the experts on TV channels do keep coming and saying that rail and defense stocks are a little expensive, they are running ahead of the fundamentals. We don't think so. We still believe. So they have more of a structural story, and the structural story will play out over a longer period of time. The kind of rally that we've seen in infra stocks from 2002 to 2007, something similar can happen with rail and defense in next couple of years. Of course, having said that, don't expect that they will not come down. There could be a price correction, there could be booking profits, but the structural story is going to remain same. Sandeep Singh, sir, Sanuji, can you please share the profit booking strategy in this market now? So, sir, what we do in our PMS is that we have a robust profit booking strategy. We have defined the threshold, okay, how much this clip has gone up after the investors bought, because every investor would have bought that company in a different price point, am I right? So what we say, suppose the scrip has moved up by a certain percentage, and if it falls by a certain percentage within that bracket, so percentage gain and the percentage fall bracket is different for each bucket. And if that happens, we will generate profit booking call on that company. Even though we may not exit from that company, for that particular client, we will exit that. So that's the PMS side. So that's completely system driven that we have done it. Now coming to your question, suppose I'm not in a PMS, but I want to do profit booking. Very simple. Look at the stock that you are holding. Profit booking or profit booking losses also. Forget about profit booking. Even booking loss is a good strategy. I must tell you that. So look at the company for which you bought, and then look at the reason why you bought continues to hold true or not. If the answer is yes, please don't exit. Don't get tempted to book profit. Okay? But if you think no, the reason I bought that company is no longer holds true and I must exit, please exit that company. And when at that time exiting, even if you are booking losses, so be it. Because you will use that proceed to reinvest in another company. And probability is very high that company that you exited will underperform while the company that you entered can outperform. So that's the way you should put in your strategy. Do you suggest diverting some personal portfolio to PMS? Vinayak sir, it's all depending upon what is your risk appetite, how much money you have, and so on and so forth. Our observation has been that when clients manage their own money, they tend to underperform over a longer period of time. Sometimes you may outperform in 3 months, 6 months, 9 months. That's a different story. But over a longer period of time, you tend to underperform. Why? Because you don't have a professional advisor to help you navigate the market cycle. And market cycles are never be the same. They always come with new challenges and new difficulties. And investors, retail investors are not equipped to navigate those challenges. So if you ask me, and second thing about PMS strategy, both soul and power are a little higher risk, higher return strategy. So if you have a risk appetite, then only you should come to the PMS. Otherwise, my advice would be, do not come to us, because our strategy bound to be more riskier, because we do invest a lot of investment in mid and small cap, and that's where the portfolio could be a little more volatile. So if you can stomach high volatility, but that high volatility would compensate you for higher returns over a period of 3 to 5 years. And if you can do that, please come to the PMS. And in fact, you said some portion, I would say, I'll give a classical example. A couple came down to our office almost, I think, 1 month or 2 months back. And they have a substantial amount in this one. But they also wanted to dabble in the stocks on their own also. I'm giving you the percentage. It was running into crores. It was not 50 lakhs or 1 crore, more than that. What I suggested them is very simple. 10% you can dabble on your own of your total that money on your own, so that you can keep mentally active and busy also, because they are retired people, retired couple. The 90% should come to the PMS. And that money that we have got, so basically I'm talking about equity allocation, not the total net worth. तो उनका अगर just to give an example, 10 crore का portfolio था, I told them 1 crore you can dabble on your own, 9 crore should come to the PMS. Why? Because probability of your outperformance on 10 crore on your own is very, very less as compared to what we are going to do PMS. So something similar I would also suggest. But remember, I'm not talking about total net worth. I'm only talking about your total equity portfolio जो है आपका, उसका 90% should come to the PMS. 10% if you have desire to do on your own, then only you should do that. Otherwise 100% should come. And that's the way you should look at it. So Ashwin say, how do you look at the HDFC Bank result? Will it affect Nifty? So sir, I just glanced through that numbers. To be very honest with you, I did not get time to go through in detail. And I think on call will throw more colors about that. So maybe if you can ask me tomorrow, I'll be in a better position. If you are a PMS customer, I'm doing a webinar tomorrow for a PMS customer. You ask me tomorrow and I'll be more than happy. Otherwise, when I come in next time in front of you, you can ask me for HDFC Bank. Right now, I have not, the con call has not yet taken place, and hence I will not be able to comment on that. Sabari Thampi saying, what exactly do you mean when you say cautious? What steps do you think will constitute being cautious? What do you think of stock holdings on a day-to-day basis? So when I said cautious, I give an example of, if you are driving in a nice highway, okay, which is not curvature, थोड़ा अच्छा है तो आपको ज़्यादा टेंशन नहीं, आप यू हैव टू बी कॉशियस बट नॉट सो मच एक्स्ट्रा कॉशियस. But when you are driving on a hilly area, hilly region, which is curvy, you need to be a little extra cautious, am I right? Because there could be a U-bend curve, there could be a blind spot and so on and so forth. That's what exactly I mean to say. I'm not saying you should stop your journey. The only thing, the way you drive through a hilly region, you are extra cautious, am I right? कि सामने से गाड़ी आ रही है कि नहीं आ रही है, जगह है कि नहीं है, that's a kind of stuff. Something similar needs to be done right now. So get into, if you are buying a company, please look into the company's fundamentals. Company अच्छी है, नहीं अच्छी है. Give more importance to quality over the momentum. And that's what exactly when I may say be extra cautious, because I don't want you to get into a company at the top of the price and then that wait will become so long that the scrape at price at which you bought that company may take 10 years and 15 years to reach that. So I don't want you to do that. Am I right? And what do you think with the stock holdings on day-to-day basis? So just see the reason why you got that company, is it good or not? Okay, if the company fundamental continues to remain the same, please continue to hold that company. If the reason why you have bought no longer exists, okay, please exit even if to book losses also. That's what I mean, sir. I hope that's clarified, Thampi, sir. For some reason it is not, I'll be more than happy to further elaborate on that. Figure you had written in white and reverse in white is not at all reasonable. Path, sir, which data you are talking about? Which data I am saying not visible, sir? Sir, if you can help me understand which slide you are talking about, it will help me to understand which data you are talking about, Path, sir. I'll be more than happy if I made a mistake, sir, to admit that. Is it possible to pull in possible in PMS? What is, sir, pulling possible? Sir, Gyanpal, sir, pull in possible in PMS. Sir, I'm not very clear cut, sir. What question is this actually? Is it possible, pull in possible in PMS? Sir, थोड़ा समझ नहीं पाया आपका सवाल. If may I request you to, sir, please rewrite your question and I'll be more than happy to answer that. Faiz is saying, good evening, greeting Sunil ji. I have some stocks in a put with more than 100% profit. All are good rated stocks as per MM's code. Please advise what would be the right strategy for future. Either switch or keep the same portfolio. See, as long as if the score says good, please continue to hold. There is nothing to worry about it. And we have stated time and again, when you're looking MarketsMojo website, continue to hold the stock till it touches 60. And if it is falling and score is 60 and falling, then please get out of it. But score is 60 and it's still moving up between 60 and 70. Please hold that stock. Don't get exit from that. But do not buy fresh buy also. But why it is a hold, it's not a fresh buy. So I hope that my answer helps you, sir, in terms of your strategy. How to find value stocks by using MM Screener? It's a brilliant question, sir. I'll ask my colleague Karan to basically take this, just forward this question. So there is a screener available where you can select good quality company with the low valuations. I think the best combination that you can use screener. But more detail let Karan gives you. Again, I repeat, good quality company or excellent quality company with the valuation low. That's the best way you can find the value stocks using MM screener. But my colleague, I'll ask Karan to conduct this in his webinar. He can cover this topic. Just for Karan ko bhijwa dijiye, please. Yeah. Ajit is saying, my 50 lakhs ready to deploy. Are you going to keep cash reserve since market is at peak? No, sir. We are not going to take any cash reserve. We don't take any cash calls. If I think you are the same Ajit to whom I spoke in the morning, I must clarify here, sir, that there is no cash pending in your PMS. I just check your account. You are fully deployed. All cash is fully deployed, sir. In feminist, are you allowed to speak on stock specific? Lakshmi ji, no, in my PMS webinar, we don't talk specific. The reason we don't talk about stock specific because we don't follow model portfolio concept. Each individual can have a different basket of stocks. And then it creates a lot of confusion in the investor's mind. ये stock मेरे portfolio में नहीं, उसके portfolio में, and so on and so forth. It will lead into a different kind of a confusion. So we don't talk anything stock specific even in PMS webinar. Lata Sundar, hi Sunil. Last week call I had asked you about this retirement plan that you suggested, where you said we can invest in equities and every 6 months to review and withdraw the money expenses after keeping an amount emergency fund. You had asked me to email you since we need to review a lot of parameters before you can help me with the suggestion and plan. Can you please connect with me? Yes, we can do that. In fact, I also promised that I'll also ask Mohit to do a webinar on that. But yes, we can. So, ma'am, you just need to do one thing. Just drop in your email ID and the contact details to us. And then my team will set up a meeting with you and we can help you do that. Parth is saying that the figure, okay, let me sir take you there. Just can you show the slide, sir? So where have we used the white and white? I've used green and the white, background and green, and here is a yellow and the black. So I don't know, sir, which, where I've used white and white. I'm confused, sir. Dharmendra is saying, what is the performance of the Mojo PMS year on year? Dharmendra sir, we started our first customer onboarded only on 30th June 2023, practically 1st July. We are in the mid of January, so we have not completed 1 year. So hence, there is no question of year on year coming in actually. We need to wait and watch basically. Let us complete 1 year and then even that will not be year on year. Why? Because only 1 year. And hence, to have a year on year, at least you need 2 years data to compare year on year. So right now, we'll complete our journey of PMS with the first customer on 30th June 2024, first year. And then 30th June 2025, then I can be able to come in front of you, Dharmendra ji, and say, what is been our year on year performance? Gyan Pal is saying, is it possible 3 to 4 investors combined investment 50 lakhs? नहीं सर, वो अलाउड नहीं है. ए सिंगल तो सेबी गाइडलाइन से इन इंडिविजुअल इन्वेस्टर्स हैज टू हैव minimum 50 lakhs to come to the PMS, single customer. They don't allow pulling of the accounts. Why? Because ultimately we'll be buying in your demat account and this one, am I right? So you can have a joint account, that's fine. And then whatever internal adjustment you can do, that's a different story. But for us, all practical purpose, the first holder is all income tax liability will come to that. That's how it will work. So you can make an informal arrangement among yourself, 3-4 investors. That's practically fine. But for us, it will be only one investor. And that's how it is going to work. Or joint holder in that case. Vinit is saying, if I want to know if anyone wants to foreclose or settle the home loan, what are documents that one should take from the loan institution upon closure of home loan, so there is no problem in future? I think Vinit sir, one definitely is your agreement that you have given to the lending institution, because you should take that. Second thing, later from the institution, housing finance company saying that you have settled and there is no pending due outside, and hence you are releasing mortgage on my house, which you have taken as while giving the housing loan. These are two critical documents that you must always take back. But having said that, Vinit ji, why do you want to foreclose the home loan? If you ask me, I would never do that. I would never prepay a home loan if I have taken. Why? Because this is the cheapest loan available you can get, because it's a secured loan, am I right? And if you can repay the EMI, if you can repay the EMI, then money that you are about to repay to the bank, okay, used in a equity market over a longer period of time, you will make more money by not repaying the housing loan. Even if you look at 20 years CAGR of Nifty 50 was 13.1, am I right? Assume that you are paying that EMI for 20 years and you can pay the EMI. So suppose you wanted to repay, you have taken 50 lakhs, you want to repay 50 lakhs, am I just giving an example? That 50 lakhs, instead of repaying to the bank, you continue to pay EMI for next 20 years. In the meantime, that 50 lakhs you invested, okay, in Nifty 50 ETF, I'm just giving an example. You are serving 8.5%, here you are getting 13.1 on an average, based on the historical data. You are getting a delta 5%, which is a huge delta on that. So why do you want to repay? But anyway, if you wish to repay, ask for release of mortgage, and second thing, your original agreement, sell deed, which you give it to the housing finance company while taking the loan. Okay. In your view, what are the top 3 parameters which define quality of a company? To what extent quality depends on market cap size of a company? See, it is, please note that market cap sometimes does give an comfort level because this company is well researched. It's a large cap or well researched, and probability the quality is good. That's why it become a large cap. Am I right? Not necessarily that will always be the case, but it could be a parameter. We do have a quality Sam Sundarji as a parameter and our 4 dots, and you can use that as a parameter to figure out whether this company is a good or bad. And the parameters available in our website: management risk, leverage, and the management parameter. These are all, and the growth parameter. Growth, the capital structure, and the management risk. These are the 3 broad parameters that you should look at it to define the quality of the company. That's exactly what we are doing on our website. Mohan Kumaran says that regarding path post, I suggest that slides be in yellow background with black letters, as in railway station. They will be better to view. Agreed, sir. I'll do that. Exactly, I think what you are saying, I did exactly the same. If you again see my screen, in yellow background, it's black font only, sir, I've used. I've used yellow background with black font, you'll use. Only thing I've used here, upper gold mein white kiya hai. I agree, that could have been better. So I agree with you, there is a scope for improvement. But sir, exactly what you suggested, yellow background mein black font, that's exactly what I did, sir. But I'll be better mindful, I think, point taken, path, as well as, sir, you, that there is a visibility issue. And I'll ensure that you don't run into this kind of a problem in my future slides. So I'll take care of that, sir. Dipchandji, that our IPO analysis is available on our website. About Medi-Assist, my request would be just go through that and do that needful. It's available on our website, sir. IPO analysis, Medi-Assist. Balaji saying, sir, hi Sunilji, MarketsMojo have 4 dots, but some of your logos, such as live QnA, has only 3 dots. Why so? So, sir, you have a very good question, Balaji, sir. So, when we started MarketsMojo, and when we started at that point of time, we need to form a logo. Am I right? And when we started, there were only 3 dots. That was quality, valuation, and recent quarterly financial performance. And that time we made the logo, and then based on investors like you, we added 4th dot, which is technicals, and that's how it has come. But we just chose, because since logo was anyway made, we did not change the logo, so it continues the same way. But we are right, now we have 4 dots, but logo has only 3 dots. Mohammad Tahil Singh, sir, I was a member of Infinity. I was happy with the service. I was not able to join PMS due to Sharia compliant stock selection. Is it now possible to select only Sharia compliant stocks in PMS? So, sir, I must be very honest with you. We did speak to someone from who basically helped us to do Sharia compliant product. But unfortunately, there are not much demand has come in. See, you can put in PMS, you can put stocks which you don't want to invest in. That some of our Muslim friends have done that. But you need to tell us which stock you don't want to do, because we will not be able to, because sometimes the company may be Sharia compliant, may not be compliant. We are not capable of doing that, to identify those things. Am I right? Because as Sharia compliant said that your interest income should not be percentage of more than, even for a IT company, for example, your interest income should not be certain percentage of so and so. That is also not Sharia compliant. So what you need to do, Mohammed sir, is that you need to tell us which are the stocks you don't want to invest in. Stocks, not the sector. and we will not invest in that company, and that satisfy your Sharia compliance, then it's fine with us. But right now we don't have any product which is Sharia compliant. So I don't want to lie to you and say, yeah, we are Sharia compliant, please come. We don't have that, sir. So you give us a list of negative stocks that you don't want to invest. Our system will not invest in those stocks. Now, without going into whether they're Sharia compliant or not compliant, we are going as per your comfort level. You are defining these stocks I don't want to invest in because these are you perceive as not Sharia compliant. There could be possibility that there will be more stocks which may not be Sharia compliant, which you have not identified. But we'll still go ahead and invest, but that's a risk you run into. Naresh Jain is saying, which is the best sector to invest for next 5 to 10 years, sir? 5 से 10 साल बहुत लंबा पीरियड हो जाता है जैन साहब, और उसमें बहुत कुछ उतार चढ़ाव आ जाता है. If you look at it historically, if the history is any guide, banks and NBFCs always over a longer period have given a good returns, but there will be a period where they will underperform very significantly. Are you willing to go through that cycle of underperformance? So what my advice would be, see, this sector call are very good for the institutional investors, not for the retail investors. Because अगर आपका sector call सही भी हो गया, और उसमें कंपनी गलत आ गई आपके पास, because and I have showcased in many times in our webinar also that what happens, your call on the sector was right, but you end up buying the wrong company and vice versa. तो आपका पैसा नहीं बनेगा. So as a retail investor, you should always focus on the company than the sector. This applies more to the institutional investors where they would take a call on the sector and then also on the company within that. And that's how you should look at it. So for example, in FMCG, ITC did very well, but Hindustan Unilever did well. Now, bank PSU did very well, but SBI did not do well last year, 2023. So what is very critical, that your call on the sector, right or wrong, doesn't going to define what returns you make. The company that you bought is right or not. And my advice would be, don't get too much fascinated by sector call, focus on the company. Ganesh is saying, good evening, thanks for keeping Equity Outlook to the webinar available online. I went through the webinar recently and I had the following doubts. Mid and small cap performance estimate against large cap. In Equity Outlook tour, you discussed about the rich valuation of India. Can you support the data of PE multiples probably next webinar? So, sir, what is your first question? Mid and small cap performance estimate against large cap. We did mention that mid and small cap came returns in a single digit, and we did give an plus to minus 5% Nifty 50 target for 2024. While we do believe that overall market will remain range bound, and mid and small cap should outperform the large cap in 2024. If you look at that graph in Equity Outlook where I talked about what percent of equity market, total market cap is accounted by mid and small cap, and that there is a still scope for an upside movement. As far as PE is concerned, I think I've discussed that many times, and nonetheless, sir, I'll put this in one of my webinars, the PE of PE multiple of India. See, one more thing I stated in my Equity Outlook webinar is that the earnings growth. See, sometimes we should also understand that market will pay you higher premium if they expect higher growth. The moment they see that market is not going to grow at the same pace it used to grow, then if they may not sustain that PE, even though it may be below the average. Our sense is that Nifty 50 in FY 2024, which is the current financial year, will report near about 18% Nifty 50 earnings growth. The next year, that 18% will come down to 11% or so. And hence, there will be a decline in the growth in earnings for Nifty 50. And I think market will try to adjust that slowdown in the growth in earnings in terms of PE multiple. But nonetheless, Ganesh sir, I'll put this data in one of my future webinars. Santosh Chavan, sir, you are saying that you have not been refunded Mojo Infinity fees. Sir, my apology. Please send your details with your bank details. One of the reasons why we are not able to refund, because almost everyone has been paid in Infinity, sir, is that we don't have the bank details of yours. So please share your bank details to us. Our accounts team will check whether the money is due, and if it is due, they'll transfer the money to you. So my request immediately, please share your bank details and also mention what amount that you're supposed to receive. My account team will check and do that. And please WhatsApp me this message. I'll also take up with my accounts team why this has not been refunded. In fact, anyone else in this webinar who has not received, please write to us and we'll be more than happy to refund. Only thing, where we don't have a bank details and we reach out to the bank customers also, but still they have not provided the details and hence we could not process the refund. If anyone wants to focus settled home loan, what are the documents that one should take? I think I've answered that. I don't know, Amir, why are you coming up the same question again? ये आपको इतना सवाल अच्छा है कि आपने दूसरी बार ले लिया. Amrita, good evening, sir. When do you foresee a bear market? We know until the election it is bull market. So booking profit criteria is important to kindly advise. So Amrita ji, I do not expect bear market. It's loud and clear. I do not expect bear market. To happen the bear market, first we need to see the bull market. Don't get confused with the correction and the crash. Correction is healthy for the market because it makes a nice base for the next leg of bull rally. And that's what's going to happen in 2024. Crash matlab bear market. I don't expect market to crash. In fact, India's economic story is going to be so strong that I think we are in a multi-years bull run market. I did make a presentation. If you go back to my equity outlook webinar, there is one slide where I talk about in last 8 years, the market has just moved by 13.5%. Despite every calendar year, it's giving a positive returns. It is one of the weakest rally we have ever seen in the history of India for such a longer period of time. So there is no bubble that has been formed that can burst. To have bear market, we must have a bubble. There is no bubble, so I don't expect bear market to happen. In the process of this, if the market hits up too much, and we go up too quickly, too fast, then yes, there could be a bear market. But right now, I don't see that's happening. And hence, I don't expect, another assumption is that market will not, until the election, it is a bull market. I don't know, ma'am. Even that's a, Amrita ma'am, that's a right prediction that one can say. Market nature, you never know what can happen. So don't assume that till election is over, market will keep rising. I don't think that's the way it's going to play out. Gopinath is saying, would you like to know the long-term impact on capital takes on short-term 15% PMS fee will be expensive compared to mutual where we have only tax on capital when we redeem mutual fund. Will PF be profitable than PF, MF? So, and that's a very fair question, Gopinath sir. If I would be in your place, I would also ask very similar question. What you should look at it, even after paying my tax, that is a post-tax returns, will I be better off as compared to mutual fund? In fact, in one of my webinars, like last week, I did a presentation where more than 90% of the medium and small cap underperformed the benchmark. More than 90%. In terms of value. So you should look at it, yes, despite paying my PMS fee, despite paying my long-term capital gain, will my return post that would be higher? We are very confident it should be higher, then only it makes sense for us to run this business. That will not make sense, am I right? We will be out of the business. So yes, we do believe that PS will be more profitable than mutual fund. Our sense is yes. And that's why we launched the PMS. Post-tax, post-phase, your return should be higher in then mutual fund in PMS. विलास, अब ये नया न्यू बाइंग कर सकते हैं क्या? ये यहाँ पे न्यू बाइंग कर सकते हैं क्या? हाँ सर, विलास सर, आप डेफिनेटली बाय कर सकते हो. यहाँ पे भी कोई दिक्कत नहीं, उसमें क्या दिक्कत है? खाली जो स्टॉक सिलेक्ट करते हो वो आपको थोड़ा सही तरह से चुनना है, पर डेफिनेटली आप बाय कर सकते हो. बोला ना, आपको जर्नी छोड़ना नहीं है. अगर रास्ता थोड़ा कड़वी दिखे तो उसका मतलब आपको रास्ता छोड़ देना है. थोड़ा संभाल के चलना है, बस वो इतना ही करना है आपको. So with this, let me conclude this webinar. I know I'll be there in front of our PMS customer tomorrow with some interesting data on corporate results, what people are saying, how IT industry has performed, no and not so. If you know that we have one of the highest holding in our IT software sector. So tomorrow I'm going to, and some of the major IT software companies have declared the numbers. I'm going to discuss that exclusive with our PMS members. So please tune in tomorrow at same time at 7 p.m. All our PMS customers, and I'll share that data with you. With this, thanks a lot everyone taking time out and attending this webinar. Good night, take care.